Tesla, I think, is an earnings report that's really hard to take seriously. Like this has gotten to a point of assuming gullibility and stupidity that is painful. The company is ending with much too much inventory. So we saw a big inventory build last quarter, another big inventory build this quarter. They're blaming logistics and inability to deliver the vehicles. But when you look at their deposits number, it implies something else. Maybe people aren't ordering as many cars, right? And therefore you are overproducing. Your margins are abnormally favorable because you're producing more units over a fixed cost, fixed cost base, more fixed cost leverage, and you'll need to deal with that excess inventory at some later time. OpEx is the thing I think people got the most worked up about because revenues are up sequentially 27%. Inflation is a pressure, a lot of basically every line of every company I've seen so far. But their OpEx was SG&A was completely flat sequentially, same exact number, which always looks totally normal, right? So there's some very basic stuff like that. But I think what really comes out is on this earnings call, Musk goes on about, it really sounds kind of goofy, right? Like he's comparing, their potential market cap to two Saudi Aramcos or a Saudi Aramco plus an Apple. And he can see how they can get there. And it's like, he goes through this part where he lists his skills where he's like, oh, I'm an engineer and a product designer. And it's like, actually, you're a sales guy. You're a great sales guy for your stock, right? You're telling everyone the value of Tesla stock is going to be two Saudi Aramcos. And that's the opening. That's what you open with, right? It's a lot. But I think this is just, as you've pointed out many times, this is just a pandemic liquidity bubble. It's kind of the central, if you think of the spider web, is right kind of in the middle or very near the middle of the, of this, liquidity driven growth, profitless growth bubble. And I think we're in the midst of a downward revaluation here. Like the numbers aren't a lot better or worse, and they don't really matter as much as just the fact that there's just this kind of stock, these factor exposures and all that kind of stuff are revaluing down.
It's like when we look back at this, man, we're going to look back at a bubble that is bigger, obviously, than the tulip bubble and certainly bigger than the dot-com bubble. And you really have to think about it in terms of like you said, this guy is a salesperson for his own stock. That's it. This thing has lost $550 billion in market cap. It's a cyclical consumer stock that sells a couple cars, and that's not where you want to be in 3 straight quad fours.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.